What is the primary objective of the Insurance Contracts Act 1984 ICA? A. To regulate insurance premiums in the private market. B. To promote competition among insurers. C. To ensure fair and balanced rights between insureds and insurers. D. To control the licensing of insurance brokers. The correct answer is C. To ensure fair and balanced rights between insureds and insurers. Explanation. The ICA 1984 was introduced to improve the flow of information between insurers and consumers and to create a fair legal framework that balances the rights and obligations of both parties. It specifically aims to protect policyholders from unfair contract terms and poor conduct by insurers. Under the ICA, what is the duty of disclosure required of the insured? A. To inform the insurer of all details related to the policy wording. B. To disclose every known detail about the insurer's financials. C. To disclose any matter known that is relevant to the insurer's decision to accept the risk. D. To inform the insurer about any unrelated third-party contracts. The correct answer is C. To disclose any matter known that is relevant to the insurer's decision to accept the risk. Explanation. Under Section 21 of the ICA, the insured must disclose every matter they know or could reasonably be expected to know that is relevant to the insurer's decision to accept the risk. This duty exists before the contract is entered into and during any renewal. It promotes transparency and fair risk assessment. What is the legal consequence if an insured fails to comply with the duty of disclosure under the ICA? A. The insurer may increase the premium retroactively. B. The insurer may avoid the contract or reduce liability. C. The insurer is required to issue a fine. D. The insured must pay double the premium. The correct answer is B. The insurer may avoid the contract or reduce liability. Explanation. If the duty of disclosure is breached and the non-disclosure was fraudulent or significant, the insurer has legal rights under Section 28 of the ICA. The insurer may avoid the contract or reduce their liability to the extent they would have acted differently had they known the full facts. What does Section 13 of the ICA establish? A. The rules on insurer solvency. B. The maximum claim limits under fire insurance. C. The obligation of utmost good faith in insurance contracts. D. The duty to report claims within 24 hours. The correct answer is C. The obligation of utmost good faith in insurance contracts. Explanation. Section 13 of the ICA imposes a duty of utmost good faith on both parties to an insurance contract. This includes honesty, fairness, and full disclosure in dealings. A breach of this duty may give the innocent party grounds to seek remedies such as damages or termination of the contract. Which of the following is not a key regulator involved in overseeing insurance and consumer protection in Australia? A. ICAC. B. ICAC of CAD. Otto. The correct answer is D. Otto. Explanation. While ICAC, IPRA, and IFCAL are directly involved in insurance regulation and dispute resolution, the Otto Australian Taxation Office is primarily responsible for taxation matters and is not a regulator for insurance or consumer protection. What does standard cover refer to under the ICA? Policies underwritten by state-owned insurers. B. Policies that must contain the same premium for all policyholders. C. Minimum levels of coverage that insurers must provide unless excluded or modified. D. A cover that is only available to corporate clients. The correct answer is C. Minimum levels of coverage that insurers must provide unless excluded or modified. Explanation. The ICA sets out certain classes of insurance where standard cover is expected, e.g. motor home travel. If an insurer wants to offer less than standard cover, they must clearly inform the insured. This promotes transparency and protects consumers from hidden gaps. When can an insurer avoid an insurance contract under the ICA? A. Only when the insured fails to pay taxes. B. If the insured misrepresents or fails to disclose a relevant fact. C. If the insured contacts ICAC for dispute resolution. D. At any time, provided they give 30 days notice. The correct answer is B. If the insured misrepresents or fails to disclose a relevant fact. Explanation. The ICA permits an insurer to avoid a contract if there has been misrepresentation or non-disclosure, especially if it is fraudulent or material to the risk assessment. This remedy ensures the contract reflects the true risk. Which body handles complaints and disputes between consumers and insurance providers? A. ICAC. B. ICAC of CAD. Treasury. The correct answer is C. ICAC explanation. The Australian Financial Complaints Authority (ICAC) is an independent external dispute resolution scheme that handles complaints related to insurance, superannuation, and financial services. Consumers must first try resolving issues with their provider before approaching ICAC. What is the purpose of the Competition and Consumer Act 2010 (CEA)? A. To regulate insurance contract wording. B. To provide tax incentives to insurers. C. To promote fair trading and protect consumers. D. To set premiums for different insurance classes. The correct answer is C. To promote fair trading and protect consumers. Explanation. The CEA 2010, enforced by the ACT, aims to promote competition, fair trading, and consumer protection in Australian markets. It covers unfair contract terms, misleading conduct, and product safety, including in insurance marketing and sales. What is subrogation in the context of insurance law under the ICAC? A. The right of the insurer to deny all claims. B. The right of the insured to sue the insurer in any court. C. The right of the insurer to recover costs from third parties after paying a claim. D. The duty of the insurer to issue a payout within 48 hours. The correct answer is C. The right of the insurer to recover costs from third parties after paying a claim. Explanation. Subrogation allows an insurer, after paying a claim, to step into the shoes of the insured to recover losses from a third party who may have caused the damage. This prevents the insured from double-dipping and allows the insurer to recoup their losses. Under Section 18 of the Australian Consumer Law, which of the following is prohibited? A. Making a complaint to the regulator. B. Engaging in misleading or deceptive conduct. C. Increasing a premium without notice. D. Requesting further identity checks. The correct answer is B. Engaging in misleading or deceptive conduct. Explanation. Section 18 of the Australian Consumer Law (ACL) prohibits a person from engaging in conduct that is misleading or deceptive or is likely to mislead or deceive. This applies to all trade and commerce, including insurance. Misleading conduct includes giving false or incomplete information or making promises that are not fulfilled. What is an example of unconscionable conduct under the Competition and Consumer Act (CCA)? A. Charging market standard premiums. B. Offering a cooling-off period. C. Exploiting a vulnerable customer's lack of understanding. D. Providing a product disclosure statement. EDs. The correct answer is C. Exploiting a vulnerable customer's lack of understanding. Explanation. Unconscionable conduct involves taking advantage of someone who is at a disadvantage, such as through limited English proficiency, mental capacity, or financial distress. Under the CEA Schedule 2, ACL Sections 2022, it is illegal for insurers or intermediaries to act unethically in ways that exploit consumers. Which of the following is considered a false representation under the ACL? A. Advising the customer that insurance is optional. B. Claiming that a policy offers coverage when it does not. C. Explaining the exclusions in a PDS. D. Stating that the insurer may decline a claim. The correct answer is B. Claiming that a policy offers coverage when it does not. Explanation. A false representation under Section 29 of the ACL involves giving incorrect or misleading information about a product's nature, benefits, or characteristics. Telling a consumer a policy provides coverage for something it doesn't misleads the buyer and breaches consumer law. Under Australian consumer law, consumer guarantees may apply to A. All insurance contracts automatically. B. All personal injury claims. C. Services provided under insurance, such as claims handling. D. Public liability insurance only. The correct answer is C. Services provided under insurance, such as claims handling. Explanation. While insurance contracts themselves are largely governed by the Insurance Contracts Act, some aspects like services related to insurance, e.g. claims handling, fall under ACL consumer guarantees. These services must be provided with due care and skill and within a reasonable time frame. In a context of sales and marketing, which conduct would likely breach the CEA? A. Offering a discount for bundled policies. B. Sending generic marketing emails. C. Pressuring a customer to buy a policy they don't need. D. Following up after a quote is provided. The correct answer is C. Pressuring a customer to buy a policy they don't need. Explanation. Aggressive or high-pressure sales tactics that result in customers purchasing unsuitable products may be considered unconscionable conduct or even misleading conduct. Salespersons have a legal obligation under the CEA to ensure marketing is fair, transparent, and not manipulative. How does the Insurance Contracts Act (ICA) apply to underwriting? A. It mandates standard policy wording. B. It limits premiums insurers can charge. C. It prevents risk-based pricing. D. It requires insurers to act with utmost good faith. The correct answer is D. It requires insurers to act with utmost good faith. Explanation. Section 13 of the ICA imposes a duty of utmost good faith on both insurers and insureds. During underwriting, insurers must assess applicants fairly and disclose material facts honestly, while policyholders must fully disclose relevant information. Which of the following is a requirement for intermediaries under ICA and CEA? A. Providing legal advice. B. Ensuring the policy is appropriate for the client. C. Offering insurance on behalf of multiple companies only. D. Setting claim amounts. The correct answer is B. Ensuring the policy is appropriate for the client. Explanation. Brokers and other intermediaries must comply with legal responsibilities under ICA and CEA. This includes ensuring that the product suits the client's needs, especially under design and distribution obligations. D. Intermediaries must avoid selling unsuitable products. A misleading product disclosure statement (PDS) can result in A. Criminal charges against the policyholder. B. Automatic renewal of the policy. C. Immediate policy termination. D. Breach of the insurer's obligations under the CEA and ICA. The correct answer is D. Breach of the insurer's obligations under the CEA and ICA. Explanation. Insurers are legally required to provide clear, accurate, and complete information in a PDS. A misleading PDS violates both the Competition and Consumer Act, misleading conduct, and the Insurance Contracts Act, duty of disclosure. Fair communication in insurance involves A. Only contacting the client at renewal. B. Selling high-premium policies to all customers. C. Explaining the risks and limitations in plain language. D. Avoiding disclosure of complex policy terms. The correct answer is C. Explaining the risks and limitations in plain language. Explanation. The ICA and CCA require insurers and intermediaries to communicate clearly and fairly. This includes explaining the product's key benefits and limitations in a way the customer understands, helping them make informed decisions. What is one of the primary goals of the CCA in relation to insurance? A. Creating government-run insurance. B. Setting national health premiums. C. Protecting consumers from unfair practices. D. Promoting insurer profitability. The correct answer is C. Protecting consumers from unfair practices. Explanation. The CCA 2010 ensures consumers are protected from misleading conduct, false representations, and unconscionable practices. It applies across industries, including insurance, and supports ethical business practices and consumer trust. Which of the following is a consequence of a serious breach of the Insurance Contracts Act 1984 ICA by an insurer? A. A mandatory compliance workshop for policyholders. B. Suspension or cancellation of the insurer's Australian Financial Services Licence (AFSL). C. Reduction in the insured's premium for the next term. D. Automatic renewal of all active policies. The correct answer is B. Suspension or cancellation of the insurer's Australian Financial Services Licence (AFSL). Explanation. Serious breach of the ICA can result in regulatory action by ICAC, including the suspension or cancellation of the insurer's AFSL. This is because all AFSL holders must comply with financial services laws. Non-compliance jeopardizes consumer protection and undermines trust in the financial system. Under the Australian consumer law, ACL, what type of conduct is explicitly prohibited in relation to insurance product marketing? A. Offering extended coverage to loyal customers. B. Providing loyalty discounts. C. Misleading or deceptive conduct. D. Offering bundled policy options. The correct answer is C. Misleading or deceptive conduct. Explanation. Section 18 of the ACL prohibits businesses, including insurers, from engaging in misleading or deceptive conduct. This includes false representations about coverage, premiums, or exclusions. Breaching this obligation may result in civil penalties and reputational damage. Financial services provider is required to refer unresolved complaints to ICAC. ICAC stands for A. Australian Financial Conduct Authority. B. Australian Financial and Claims Administration. C. Australian Financial Complaints Authority. D. Australian Finance Commission of Arbitration. The correct answer is C. Australian Financial Complaints Authority. Explanation. ICAC Australian Financial Complaints Authority is the external dispute resolution (EDA) scheme for resolving complaints between consumers and financial service providers. All AFSL holders are required to be members and must refer unresolved complaints within required timeframes. Why is clear and accurate client documentation critical under risk management principles? A. It helps defend against legal claims and regulatory reviews. B. It reduces insurance product costs. C. It minimizes paperwork for the insurer. D. It improves team morale. The correct answer is A. It helps defend against legal claims and regulatory reviews. Explanation. Maintaining detailed and accurate client documentation is essential for demonstrating compliance with the ICA and ACL in the event of a dispute, complaint, or regulatory inquiry. Records serve as evidence of due diligence, full disclosure, and adherence to ethical practices. Which of the following best describes a conflict of interest in insurance advisory services? A. A client changes their policy coverage mid-term. B. An advisor receives incentives for recommending a particular product. C. A broker assists two clients with similar policies. D. An insurer offers online policy updates. The correct answer is B. An advisor receives incentives for recommending a particular product. Explanation. A conflict of interest arises when an advisor's personal or financial interest could compromise their duty to act in the best interest of the client. Accepting incentives for product recommendation without disclosure breaches ethical and legal obligations under the Corporations Act and ICAC guidelines. What is one key internal control that insurance companies use to promote ethical compliance? A. Using only oral consent for policy updates. B. Outsourcing all claims management to third parties. C. Removing all written communication with clients. D. Mandatory compliance and legal literacy training for staff. The correct answer is D. Mandatory compliance and legal literacy training for staff. Explanation. Regular training ensures staff understand their obligations under the ICA-ACL and the insurer's code of practice. It helps reduce the risk of breaches, promotes culture of accountability, and supports compliance with AFSL conditions. Which of the following is a possible penalty for breaching the Australian consumer law in the context of insurance sales? A. Loss of right to sell life insurance products only. B. Cancellation of insured's policy. C. Civil penalties including significant monetary fines. D. Mandatory premium reductions. The correct answer is C. Civil penalties including significant monetary fines. Explanation. Businesses that contravene the ACL can face civil penalties under the Competition and Consumer Act 2010. For companies, this can be up to $50 million per breach as of recent amendments or a percentage of annual turnover. Misrepresentations or misleading conduct in insurance sales can trigger these consequences. If a customer complaint is not resolved internally within 30 days, what must the licensee do? A. Escalate the matter to the Financial Ombudsman Service (FOS). B. Close the complaint file automatically. C. Refer the complaint to ICAC. D. Notify ICAC of the client's dissatisfaction. The correct answer is C. Refer the complaint to ICAC. Explanation. Under RG 271, a ICAC regulatory guide, licensees must respond to complaints within 30 calendar days. If unresolved, the customer must be advised of their right to escalate the matter to ICAC, the approved EDA scheme, which record-keeping principle supports effective legal defense in the event of a dispute. A. Keeping only the final signed policy schedule. B. Maintaining contemporaneous and complete records of all client interactions. C. Documenting only phone conversations. D. Destroying documents older than 12 months. The correct answer is B. Maintaining contemporaneous and complete records of all client interactions. Explanation. Comprehensive and timely documentation is crucial for demonstrating transparency, compliance, and appropriate conduct. This includes notes on advice given, disclosures, and client instructions. A ICAC expects firms to maintain such records to ensure accountability and legal defensibility. Which of the following actions may lead to a breach of ethical standards in professional insurance conduct? A. Recording all client conversations and outcomes. B. Encouraging a client to lodge a fraudulent claim. C. Explaining exclusions clearly to a client. D. Recommending policies aligned with the client's needs. The correct answer is B. Encouraging a client to lodge a fraudulent claim. Explanation. Facilitating or encouraging fraudulent activity violates both legal obligations under the ICA and ethical standards under the insurance industry's code of practice. it can result in criminal charges, regulatory action, and permanent reputational damage.